Good morning, you've tuned into ET Now and you're watching Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karunya Rao. Let's do a quick check on the markets. We are in the positive, luckily 13,943. We opened much higher, we floated with 14,000 despite the fact that global cues were a bit muted. We've now, over the course of the morning, sold off slightly, but just in the last 10 to 15 minutes, we have begun a climb back towards where we opened. Let's see how we wind up by the end of the show. Bit of mixed market breadth today. The banking index taking it slightly on the chin. It's down around 0.3%, but your auto index is doing well. 0.6% gains there. Midcaps are just about holding out in the green, and of course they're pretty much in line with the broader index. In terms of some individual stocks today that are shining for different reasons, you have Bajaj Finance gaining 1.5%. You have Eicher Motors gaining 2.2%. You have a TechM doing well, 1.4%. Ultratech making a comeback, 1.17%, and then UPL today actually top gainer on the Nifty, up 3.5%, 470 rupees for that one, and also the largest volumes we've seen in a while. I believe there's also huge open interest for UPL on the futures, significantly inching up as of this morning. Now on the losing side, two big pharma companies, Sun Pharma and a Cipla today, both losing nearly 1%. Then you have a HDFC Ltd, which is also down around 1%, quite rare. Then you have a Gale as well, which is down 1%. So, of course, we're having some select stock action, and given the level we are at the benchmarks, it's very hard to find a clear defining trend. But what's encouraging is that we're holding firmly above 13,900, not slipping below. Over to you, Karunya.
All right, so on that note, let's pull up the Buy Now, Sell Now stock cloud as well to give our viewers an understanding of all the stocks to keep on their watch list, starting with an EID, Parry and Coromandel. It's an ET Now story that we did, wherein we picked up from sources that EID is looking to sell stake in Coromandel via a block deal. Next up is Balkrishna Industries. Nomura has come out with a fresh note. They have maintained the buy rating. They believe the company stands to benefit from the current recovery in agri-tire exports. Then you also have Jindal Stainless. It's definitely the cynosure of all eyes on the back of that merger announcement that they've done. Jindal Hisar Steel will now become a part of Jindal Stainless Steel, and that merger deadline is 1st of April 2021. Moving on to UPL, they've said that there's been a prepayment of about $410 million of 3.25% bonds, which were actually due on October 2021. So they've made it in advance. You also have a CARE rating, a stock that we don't address too often. In focus on back of a bulk deal, the buyer has been Fashion Accent International Value Fund, who has dipped into this particular counter. You also have an IndusInd Bank in focus. Antique has maintained their hold rating. Target that they've given is 925 rupees a piece. They've said asset quality pressure could persist, but yes, it definitely seems to be lower than anticipated. However, IndusInd still ranks low in their order of preference. You also have a Jindal Steel and Power, which is in focus. Indian Railways has awarded it the status of a regular supplier for 60 kg 880 grade rails. In fact, JSPL is the first private company to get this status from Indian Railways. Then you also have a rice company, KRBL. What we're picking up from sources is that the government may consider an extension of ethanol production subsidy to rice and corn manufacturing companies. So KRBL definitely a big beneficiary of that. And given that there is a union meeting that's underway for ethanol subsidy, you also have a Praj Industries which is spiking in trade. So there you have it, 10 stocks to keep on your radar this morning. Let's take it all across to Kunal Bothra and Gaurang Shah then to talk more about the markets. Kunal, hi, morning. Talk to us about which way do you see Nifty go over the near term in the next couple of days. 13,900 is something that will comfortably breached on the upside, but what lies ahead?
So, good morning, Karunya. I think there are a lot of, I would say, positives for the markets. One, that we are closing the second successive series, the December series, on a very strong footing, assuming if the Nifty, crosses above the 14,000 marks by today, tomorrow, then that could also be a very strong, I would say, landmark as such for the index. overall we've seen a lot of positives for market in terms of internals. So so many variety of sectors making a comeback. The Nifty IT stocks making a very strong comeback. You have the pharma index also, which has moved up higher. You have a mix of high beta pockets. The real estate stocks in the last couple of days did pretty well, and the banking index overall has done pretty well. So I think overall texture of the market still remains buoyant. Yes, you might have those few odd corrections like what we were accustomed to in last 1 week. We had the big correction previous Monday. Yesterday also there was some bit of a cool off on an intraday basis. But I think those could be just short term aberrations for the markets going along the way on the upside. So till the time the index doesn't break some major support levels, the bias remains to be on the positive side. Today I would be initiating a couple of buy calls, and I think the focus and the theme is more on the large cap names and the ones which have been more strong and sturdy in terms of performance. So the first one which I'm selecting is about UltraTech Cement. Many of these cement stocks have start to show signs of strength again. UltraTech Cement has been one of the strongest name from the cement pack, both in terms of price volume action as well as in terms of how the indicators have shaped up for the stock. So I think even at current levels, UltraTech Cement looks attractive for another 4 to 5% on the upside. Would suggest a buy with an immediate target closer to 5,280. Stop loss to be kept at 5,080. And the second would be from the auto pack. I would suggest a buy in Hero MotoCorp. Have been very bullish on names like Tata Motors and Maruti, Bajaj Auto as well. I think last week I had given slew of these calls. I think Hero MotoCorp is also showing signs of a comeback again. There is this inverse head and shoulder pattern which is likely to get formed. The right shoulder is getting formed as we speak right now. So I think if the stock breaks out of this inverse head and shoulder pattern, even this stock you could come back into the thick of momentum. So I'm anticipating a breakout on Hero MotoCorp. Would suggest a buy. Targets need to be kept at approximately 3,200 and stop loss at 3,040.
Okay, thanks for that, Kunal. Hi, Gaurang. Good morning. What's on your radar today?
Thank you, Varun, and morning to all of you also. I think good riddance to 2020 is what we can say post whatever we've seen end of March and beginning of April in form of this pandemic, and the kind of impact it had on the global economy as well as our own economy. And now with the unlock process virtually getting done and dusted, and the dry run of this vaccination for Indians is likely to kick off sooner rather than later, I think it's going to look quite positive. One of the most positive things that I look at in the market is the proactiveness from the government side, Varun, in terms of timely changing the policies and making it the environment more conducive for economic growth and for corporate India's growth. So my sense is that this will continue. Of course, the big event that we are watching next is the budget 2021, and I'm quite sure that we are going to see a very positive budget rolled out by the Honorable Finance Minister. Having said that, a couple of investment ideas. Two of them are from the mid-stroke small cap, if you will. First one is Manapuram Finance. We've been talking about this stock for a pretty long time. These are fundamental ideas, Varun. So these are not short to medium term. These are low risk, fundamental, long-term investment ideas. Manapuram Finance targeting 195. The second one is from the clean and green energy space, that is Petronet LNG. 330 is the target. And if I have to give you, do you want me to give the stock pick for 2021 that we are speaking about, Varun, right now or later, whatever?
Okay, all right then. Request you to both stay on with us. We'll shortly address our viewer queries as well. But for now, let's take it across to my colleague Jayesh, who's joining us for some ET Now Insights as we wrap up this year. Let's take a look back at how the year was for the equity markets. Jayesh, fill us in.
So one thing that has stood out really well in 2020 has been the volatility across global equity markets, and that's the reason in India too, the India VIX index has surged almost 80% for the year. What has performed rather well for in this year has been the IT and the pharma stocks. Both of them are giving more than 50% return on an index level. But towards the end of the year, it was the broader markets that also came off their own and surged more than 20%. If you have a look at the performance of the Nifty, though it's double digit, but we have managed to scale back towards the lifetime high level, which is still lacking in terms of the Nifty Bank Index, because that is still trading in the negative zone and yet to achieve fresh lifetime high levels. What hasn't performed well has been the PSU basket. So you have the PSU Bank Index as well as the PSE Index that has given you negative double digit return, while the media space is also down about 10 odd percent. As far as Nifty stock specific action is concerned, Divi's Laboratories has been the only stock that has doubled in this year itself, while you have some of the other IT and pharma names such as Dr. Reddy's, Cipla, HCL Tech and Infosys, which also make it into the top 5. What's not done well has been the PSU space. Once again, you have Coal India, ONGC, IOC, BPCL as well as NTPC and SBI, which feature in the top 10 losers list. As far as mid-cap gainers are concerned, you have a lot of stocks which have more than doubled for themselves. Navin Fluorine, Adani Enterprises, Adani Gas as well as Mindtree and Escorts are the ones that have doubled for themselves, and some of the financial names that feature in the mid-cap losers category, the likes of Yes Bank, Edelweiss Financial as well as Canara Bank and Union Bank of India, which make it into the top 5. But there's been a lot of stocks that have been multi-baggers in this year. The biggest of them all, of course, has been Tanla Platforms, which has surged 10 times, followed by Alok Industries and Boracel Renewables that has surged about 7 times each. Then you have Adani Green that has been one of the large cap stocks that has been a multi-bagger for this year. Aarti Drugs and Laurus Labs also surging nearly 5 times each for this year.
Okay, that was quite a nice summary actually from Jayesh regarding what's done well this year and where the outperformance has really played out well. But let's switch gears. We have an important news break, unfortunately for all of our viewers who might have been looking at traveling to the UK in the early part of next year or in the end of this year. A decision has been taken to extend the temporary suspension of flights to and from the UK. We also now know that the new strain has entered here. So 7th of January 2021, thereafter, these flights will be strictly regulated and resumption will take place, for which details will be announced shortly. This quotes from Hardeep Singh Puri, the Aviation Minister of India. So perhaps a slight change to people's travel plans to and from the EU and particularly the UK. But let's come back to markets and to buy now, sell now, the core of what our show is about. Gaurang, what are your top picks for 2021? If you feel a few stocks that might really shine out or from any particular theme, could you highlight that for our viewers, please?
Sure, Varun. So instead of giving a couple of ideas, I think it will be prudent on my part to stick one very strong conviction idea, and that is from the IT space. And we all know that pharma and IT are the star performing index or sectors, and they will continue to play out extraordinarily in terms of earnings visibility and that translating it on to the share price. So one very strong conviction idea that we at Geojit are recommending is big boy IT name TCS. The stock has done wonders over the last 3-4 months, and our sense is that this remaining 2 quarters and the next financial year are going to be equally more stronger and promising in terms of business outlook and earning visibility. And with that in mind, though it may look a very conservative price target, but I'll give a disclaimer over here. 3,350 is the conservative price target that we have. This price target gets revised upwards in case if the earnings beats our estimate. And I'm quite sure that next financial year is going to be a spotlight on both IT and pharma again.
All right, Gaurang, thanks for your bets for the new year. Let's take it across to my colleague Mubina Kapasi. She has a What's the Story prepared for a big gainer this year, a multi-bagger of sorts that has been Tanla's platforms. Mubina, fill us in on what's been the story for this one.
if we had to talk about one multi-bagger, one small cap company that has made tremendous wealth for its investors, it's got to be Tanla Platforms. Now, if we would have brought up the name of this stock just about a year ago, you would have probably dismissed it or not found a lot of information. But for those investors who, caught the story a bit earlier on, guess what? Your wealth has zoomed by 900% just in the last 1 year. Now, we won't blame you, of course, if you dismissed of this stock earlier, because, back in 2008, the share price was trading at 400. It was a number one in the USSD service, which essentially was something that was used by GSM phones like Nokia. But then subsequently in 2008, roughly, Nokia sales plummeted, and that in turn led to Tanla's fortunes as well being eliminated. The stock, in fact, traded as a penny stock, for the most part of 2010 and 2015. But things changed, and how? There was a new management brought in. They expanded their business significantly. In the last 2 years, they made two significant acquisitions, Carix as well as Gamoga. The margin profile changed, and what's also interesting is that they have, in September, launched a new platform called Tableau Q. Now, what's interesting about this is that it's the world's first blockchain-enabled commercial communications platform. And in the first month of it being launched, it managed to grab almost 70% of the DLT transactions that are conducted. This is really big, and tech geeks will really flag this off as a big achievement. So that's another trigger for the company. The margin profile, like I mentioned, changed significantly thanks to the acquisitions. We have, of course, seen marquee investors recognize this. MIT's endowment fund. We also had Akash Prakash increasing their stake or purchasing stake in Tanla Platforms. The promoters have been hiking stake. There are a few negatives like the rich valuations, the fact that their receivables as well are a bit high. But all in all, this is a stock that has gone 10x in just the last 1 year, that to a year that was quite a tough one for many companies around the world.
Thanks, Mubina, for that update. Slipping into a break here. When we come back, we'll address our viewer queries. Stay tuned.
Hi, welcome back to Buy Now, Sell Now. Let's get on board with our experts who are still here and our queries from our viewers. The first query is from Riyan Bhatia of Mumbai. He's held HUL over the last 1 year. The stock has not really done anything for 9 months. Should I hold or book out? Kunal, coming to you first, the most stable chart in our market, I mean, if you look at it in Feb, it was 2200. It fell for a span of 1 week, and then by first week of April, it was back at 2400, and now today we're still sitting at 2400. So it fell the least. There was no panic, but it's also underperformed the markets if you look at other charts from March till now. So what's your reading on an HUL?
So yes, it's relatively underperformed, but I think you can't expect too much of I would say a high beta pocket moves into names like HUL, because these are strong and sturdy performers over longer duration of time. You can't expect that these stocks will do cartwheels in 6 months or in 3 months kind of a time frame. The inherent nature of these stocks is not something of that category. So I, for one, believe that HUL and many of these other FMCG names, these are the ones which have to be part of your portfolios, and don't look at them as just trading bets with time frame of 3 months, 6 months, and you're expecting some sort of a reward. These are steady compounders. These stocks have done phenomenally well. You look at the last 5 years, 10 years, 15 years of chart patterns for names like HUL, and they've done remarkably well. So I, for one, believe that there should not be any reason to fret away. If HUL is a part of your longer term portfolio, then I believe you should definitely keep a hold on it.
Okay. Gaurang, what about you? HUL is definitely among the key FMCG companies that have strong brand and pricing power. They've done consistently well over many, many years for now. So do you concur with Kunal's view? Is it a strong and steady performer even at the current valuation?
So what I would like to request Riyan is that forget about exiting the stock, hold on to it, and I don't know what is the quantity or at what levels he got invested, because that is missing out if I'm not mistaken, Karanya. Hold on to it. One of the core strengths that you look at in a stock if you are investing is from a long-term point of view is that how well a stock can withstand the volatility. And I think in case of HUL, it is a par excellence stock. And I concur with Kunal's view. I think stocks like HUL, you have to give it time. And, investing into stock market, Karanya, is all about patience. You can't expect a espresso coffee or a fast pizza or a burger from your investments in HUL. We maintain a positive view, excuse me, I beg your pardon. And if I have to reflect upon the strength, well, we were quite pleased with the kind of double-digit volume growth and margin improvement. And my sense is that long term, definitely you will see your investment growing at a much higher level.
Right, moving on then to query number 2. It's from Divya Iyer, based in Mumbai. She has been tracking the CV cycle, it seems. She's asking, since the worst of the CV cycle is behind us, she wanted to enter a stock like Chola Finance. She's asking, has it run up too much, or can one enter even at the current levels? Kunal, over to you for Chola Finance.
So I think if you're looking at it from a shorter term angle, yes, the run up has been too much. But, look at it this way, that the markets will always try to favor stocks and, the ones which are looking quite attractive. They will not be available at cheap valuations for a longer duration of time. We can look at bifurcations even from the financial services name, even on the few names. I think Bajaj Finance and FinServ, they're trading at life highs for themselves. Chola Finance has also done that. I think in the last month or this month as well, the stock has made a fresh high for itself. So and look at the other pack, from the financial spaces. Many of these stocks have not even come back closer to the 52-week highs. Forget about trying to touch the lifetime highs in individual names. So I think in that regards, the markets are definitely favoring some sort of stocks. Now, the reason why I believe that short-term aspect, you might probably be in a bit of a tricky situation, is because the stock has run up too fast, too swift. Ideally, we've seen Chola Finance and such names, they go through a period of either time correction or a price correction. So if you can buy on dips this stock, then I believe it could be a very good strategy. Starting at 380, which is current levels for Chola Finance. I think if you have a staggered manner in which if the stock falls to another 20-25 rupees, I think keep on averaging it further lower at those levels. I think that would be a better strategy for Chola Finance.
Okay, great. Thanks for that, Kunal. So buy on dip strategy. Gaurang, coming to you, great management, Murugappa Group. And while it has run up steeply, the worst of the CV cycle, people are saying it's behind us. Does it warrant entry now, or would you, like Kunal, wait for some dips?
Well, I have always been an advocate of, never rush into the market when it comes to your investments, Varun. On the flip side, if you're getting the kind of return you want, you should be the first one to run and book that profits off the table. Bring your profits home. But investment should also be done very systematically, with some amount of understanding and for a longer period of time. While I don't disagree with your statement that it is one of the stronger names as far as corporate India is concerned coming out of South India, my understanding, or our understanding at Geojit, is that the scrappage policy is going to be a game changer for the CV manufacturing companies, and along with that, Varun, it's going to be a major game changer for companies which finance commercial vehicle. And over there, I think two names stand out. One is Chola and other one is Shriram Transport Finance. We are positive on both of them. Prudent that, elevated levels should be, used wisely in terms of your investment, and buying in parts and dips has always turned out to be a great strategy.
Okay, so both our experts concur. Of course, it's a quality stock, but you might just see some weak days where you might get a slightly better entry point, and then, of course, you can pull the trigger at that time. Let's move forward to the next query. Garima Bharadwaj of Pune invested in Coal India at 120 rupees level. Should I continue to hold or exit? Kunal, on the chart, what do you think Garima should do?
These PSU stocks, apparently Varun are looking quite strong. Coal India, I think, has been looking strong in the last 1.5 or 2 months. But, I think whether this is the only PSU stock which can move up higher and give you some strong returns, I probably have my reservations over there. So it looks, okay on the, charts. The recent last, 2 months of trend looks to be quite stable. The, very interesting part about the charts for Coal India and many of the PSU stocks is even in this rise and then a correction, these stocks are holding on to their 200-day moving averages. So that's the first positive longer term signal which is emerging. But then again, these stocks are traditionally very low beta names, and they could go through gradual uptrend. They could test patience for a lot of investors, and at least over the last 3-4 years, Coal India has not been a stock which has given you, some incremental wealth. So I think in that regard, there are a lot of imponderables for Coal India. So I would suggest that if you can switch on to, some other name, that will be much better. Maybe a private sector, name could be a much better prospect over here. You could look at maybe Reliance Industries at current levels of 2000. I think it's not a bad bet. Or if you're looking to, switch to some sort of an aggressive name, then I would recommend, Wipro at current levels of 380, 385. So I think if you can make that switch, that'll be far more better. But for Coal India, I believe it's an average chart, but I think a lot of imponderables, at least from a near to medium term.
Okay, well, that's the word coming in from Kunal on Coal India, who is a bit cautious about the future prospects of the stocks. Gaurang, what is your assessment of the sector and of this particular stock in particular? Because coal mining has now opened doors to private players. There's power distribution as well, something that the government is looking to open up in a big way. Where does Coal India stand within the space, and what is the key triggers perhaps that one could be betting on for future growth?
The most important key triggers, Karnya, would be that the very recent news flows, which have been positive, and the divestment process as the government speaking about, but that's a little bit, a thin line, if I can use that word, because you don't know what valuation, to whom, what time the divestment takes place. So while the news flow is positive, hold on to the stock, but don't expect, phenomenally high returns. I think 150, 160 levels should be used to maybe exit the stock. We have a hold, and those are the targets that we have set currently. And prudent to maybe switch to one company that I just mentioned in terms of investment idea is Manapuram Finance. I think switch over there would be more sensible whenever you see Coal India reaching 150, 160. And secondly, while it is one of the best natural resource company in terms of coal reserves, highest in the world, but at the same time, if you look at historical performance, then that tells you a very different story altogether. So prudent to hold on now, but 150, 160, lighten up and move into Manapuram Finance.
All right, there you have it, the verdict on Coal India. Finally, we have time for one more query. Sham Karani writes to us on Twitter. He wants to invest in Thermax at the current market price, and he wants our expert views on the same. Kunal, Thermax has seen a good run-up. In fact, in the last 1 week odd, it has gained about 30 odd rupees. Is this a good level to enter? 905 is where the stock is currently perched at, or should he wait for some dips?
He can enter at levels of 870, 875. That could probably coincide with the stock coming back and testing the 50-day moving average as well. So I think if that happens, that could be a good entry point. But just remember one very important caveat over here is that it's an extremely thinly traded counter. And when you're stuck in a thinly traded stock, which is more of an illiquid stock, it could be a difficult decision if the stock goes through a corrective phase. We've seen many of these stocks when they start to correct, which are low on liquidity, they could go through a sharper correction, and exiting the stock, even if it, for example, hits your stop loss, becomes a bit of a tricky scenario. So just keep that caveat in mind when you're looking at names like Thermax. As an entry point, I think 875 could be a good entry level if you're looking at short-term trading longs.
Okay, thanks for that, Kunal. Gaurang, what about you? Any triggers for an up move in Thermax? What would your advice be?
As a disclosure, we do have a buy call on the fundamental side on Thermax. And we're quite positive with the kind of business that Thermax has. And we expect the order book to grow to a much more higher level from where it is right now, given the events which have unfolded, Varun. So I think if you are a long-term investor, I would definitely advise buy on dips. But don't allocate a large exposure of your capital to this stock.
Okay, great, Gaurang. Thanks for that. On that note, a big thank you to both our experts for joining in. As always, great to get perspective from you. Time for a quick break on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute.
Welcome back. You're still watching Buy Now, Sell Now right here on ED Now. Sugar stocks once again back in the limelight. Look at Praj Industries, the way it has spiked in trade up a solid 5.5%. The cabinet is in a huddle to finalize ethanol procurement and production prices. Karishma joins us with all the details and to tell us what to expect out of this meeting. Karishma.
Well, we broke the story to you early this morning that Cabinet likely is to take up extension of ethanol procurement subsidy towards other grain-based distilleries. And usually this kind of government subsidy only comes for the sugarcane distilleries, but it is going to be for the first time that government is trying to extend soft loans to other grains in order to procure ethanol. Government is doing it in order to reduce the load of the sugar distilleries and also to reach the ethanol blending target of 20% that they have set for 2030. In fact, what I'm picking up is that from sources, both Petroleum and Food Ministry had met recently on this and floated a cabinet note last month that they want to look at other such agri-feedstocks such as rice, maize and barley from where ethanol can be extracted, and for this government is willing to extend the loans. Today, if Cabinet approves that, it's a big move for not only the ethanol production companies, the OMCs, but also for sugar companies and sugar stocks. And this whole nexus where the government is trying to divert more and more grains towards production of sugar, of ethanol.
Karishma. Let's switch gears a little bit. You know that we at Buy Now, Sell Now have been putting our viewers' interest at the forefront, particularly with education on some simple investing concepts. Making a living or securing a future out of investing in the stock market is not as difficult as one might think. It's not about hitting the multi-baggers, but simply about systematic investment in stable compounders and above all, staying invested. Compounding at a stable 10 to 15% can change your financial position. Listen into this special report. Let's say it was you who invented the marvelous game of chess over 1400 years ago. The king of the kingdom, in order to reward you for this marvelous invention, offers you anything you may desire. What do you ask for? Gold? Precious rubies? Land? Well, what may come as a surprise to many of you is that all the inventor asked for was rice. The king, upon hearing this, laughed as he was prepared to give the inventor anything he desired. But the inventor simply looked down at the chessboard and humbly began saying, I want you to put 1 rice on the first square of the chessboard, 2 on the second, 4 on the third, 8 on the fourth, and then so on and so forth. By the end of this exercise, the king was to give the inventor 2 to the power of 64 minus 1 grains of rice. We're not going to get into how big this number is. All you need to know is that there isn't enough rice in the world that the king would have been able to give the inventor. It is this very marvelous phenomena of compounding that Albert Einstein coined as the 8th wonder of the world. And today, we at ET Now are going to help you figure this out. What is the power of compounding? The power of compounding is when wealth multiplies over time as a result of interest that accrues not only on your principal investment, but on each year's cumulative gains as well. We're about to illustrate this via a simple example. 2 men, one aged 40 and the other aged 25, both enter their bank looking for a systematic investment plan known as an SIP that they can access when they retire at age 60. For the 40-year-old man, that means he has 20 years of investing to go. For the 25-year-old man, it means he has 35 years of investing to go. Given that the elder man is earning a higher salary, the bank manager advises him to do 25,000 rupees per month, which equals 3 lakhs per year, which equals 60 lakhs over 20 years. For the younger man earning a lower salary, the bank manager advises 14,250 rupees per month, which equals 1.71 lakhs per year, which also equals 60 lakhs by the time he's done with his 35 years of investing. So given that both men invested 60 lakhs, shouldn't they both have the same amount of money when they turn 60? Wrong. The answer is that the elder man has just a 4 crore portfolio when he turns 60, whereas the younger man has a 20 crore portfolio when he turns 60. So why is it that the elder man, who was paying a higher monthly installment, today has 1/5 of the portfolio of the younger man when they turn 60 years old? That's because the younger man has the added benefit of 15 years of additional compounding on his investment. That's why we at ET Now want to drive the point home that it is not how much you invest that matters. It is the duration of your investment. If you can invest systematically over a longer period of time, you will make more money than someone who can invest higher money than you in a shorter period of time. Hence, we would like to advise you to get your youngsters started on investing early so they too can reap the benefits of compounding and find their way to wealth when they come of age.
Slipping into a break here, more updates and insights lined up on the other side. Stay tuned.
Hi, welcome back to Buy Now, Sell Now. You're watching ET Now. Quiz time, and we have the answer for you. We asked you which one of the following stocks had delivered the highest shareholder return in the last decade, seeing as we are coming to the end of this one. We had HDFC Bank, Bajaj Finance, Astral Poly, and HUL were your options. Bajaj Finance, it's been more than 100 bagger, 35 rupee stock at the end of March 2010. Today stands at 5,200. Number 2 was Astral, almost as good. It's been 100x. So we have a few winners who got it right. Himanshu Upadhyay, Ashok Shanbag, and Venkat Sairao Dhikonda. Congratulations to all three of you for being the promptest responses and, of course, for guessing the correct answer. And on that note, completely out of time here on Buy Now, Sell Now. Bye from Karanya and me. Stay tuned to ET Now.